Okay, as we're waiting for some additional folks to get online, um, we did our little poll last time. I don't have anything as high tech this time, but if you just wanted to use the chat question feature, would love to get a sense from everyone of how have the last 30 days been going for all of you. Let's see. I've got nothing but silence, Jenny. I don't know if that's a good thing or a bad thing. They either have been so busy that they can't type. Madeline Sater says busy. Hicks, a May burst for June closings. Much better from Karen Poland. Going well. Picked up 3 clients from Chis Chung. Been really busy. Russell Gray. Very busy in caps. Chris Hayes. June is picking up speed from Susan Jankowski. Pretty busy for me. Andrea Waters. Bob Freeman swamped. You're not a gator, Bob. You're a bulldog. Let's see. Getting back into the showing business, Lynn Borkowski. 4 new listings from Susan Jankowski. Way to go, Susan. Very challenging with buyers, multiple offers, disappointment. We will talk on that a little bit. Robin Zimmerman, you're not alone. Starting to pick up Terry Johnson, Diana Flores. I'm tired. I think we're all a little tired. I know that Jenny and I would be love nothing more than to be doing this face to face with all of you guys. We are getting there just as soon as we can. Being cautious and keeping safety in mind, obviously, is well. So thank you again for jumping in on that. Appreciate that. Please feel free to use the chat question feature as we're running through the presentation. We have got lots to share with you today, and let me go ahead and get that pulled up here momentarily. Hold on one second. Let's see. All right. Okay, hopefully you see the June update for the new market realities. I think that is the case. So, great. Just looking at a couple other, seeing more multiple offer situations. Let's see. Barbara Malms, tired of being stuck in quarantine mode. We feel you, Barbara. But anyway, so this month, we're going to really kind of dive a little deeper into the actual numbers than we may have done in the last April and May updates, and really kind of looking more specifically at trends that are happening in the 6 core counties. For all of you Gwinnett folks out there, we have included Gwinnett in this month's numbers. So we heard you and we have listened, and so you'll see that as well. And we're going to kind of just go through some of the things that have been happening. We'll touch a little bit on just some general trends and some things happening on the national landscape, but we're really going to be just looking more at what's been going on specifically in the 6 core county area, and some things that we can hopefully impart upon you that you can then in turn take and share with your clients, customers, buyers, sellers, so you can help them make better informed decisions as we all navigate coming out of this trough. And we're going to talk about that a little bit as well. But Jenny, before we jump into that, is there anything that you'd like to share with the group? I know we are coming off a pretty awesome May. You made mention of that in one of your videos, but anything you'd like to share with the group?
Now, I just want to thank you. Yes, we feel like we're on the upswing, and we'll talk a little bit more about that later. But you all have been incredible in your support of our family of services, and that has really helped aid us in a very positive direction. So I know you're all out there working hard, as evidenced by your chat feedback. And I also want to thank you, Todd, for doing the diligence and the homework on this to share with all of our team. It's really great work. So kudos to our awesome people.
Thank you. I'm a nerd by nature, I guess, a numbers geek. So, it's like one of those things I like to do. So I'm happy to do it. All right, well, we're going to jump right in here. And first slide we're going to take a look at is the sales summary. Again, I'm still comparing the first quarter to the last 30 days. And the reason I'm still looking just at the first quarter is I kind of consider that the pre-COVID days. We obviously came in, started dealing with this in mid-March, but I think the pipeline was pretty much already in existence for the closings we experienced in March. So really wasn't a real indicator. I think it's a good starting point. And so what this is showing us is where we are, what we had happen in the market over the last 30 days versus a comparison of what we did in the first quarter. And for all of you, you probably remember that the first quarter we came out like gangbusters. I know we set some records, personal records for us as a company in terms of our sales volume and everything else. So I just think it's a nice comparison standpoint. So as you'll see, the biggest thing here is that to jump out is that we still are trending below where we were from a percentage of the price reductions that we were seeing in the first quarter versus the last 30 days. And so that's a positive sign. However, we're going to get into some information here in a little bit that I think that we are going to start seeing us kind of move back up towards the numbers that you're seeing there in the first quarter due to some overpricing of current inventory. But the key takeaway here is the percentage of price reductions post-pandemic is still lower than the first quarter selling frenzy we all experienced earlier this year. The next slide we're going to take a look at, and Jenni, please feel free to jump in here as well, but it's kind of showing, this is a new slide from last month, something that I've added, and I just wanted to show kind of what has happened in the last 30 days, which would basically be the middle of May to the middle of June versus what happened from April to May, as we were kind of in the bottom of that trough, bouncing along and coming up out of that. So Jenni, why don't you share with them kind of what that the positive sign there is in units closed last 30 days in those green numbers, the 5.2%, 14.8, and so forth.
Sure. If you compare that to what is it, the 1, 2, 3, 4, 5th column, I think, if I did that right, you can kind of see the difference. In Cherokee, it was 268, and now it's in the last 30 days 282. So as you'll notice that, and you track both of those columns going down, you'll see that there's been nice improvement with Cobb leading the way, shortly followed by DeKalb and Fulton. Gwinnett is not quite there, but I'm sure that they will catch on fire. In fact, we're likely already seeing that in the works, so they will catch up quickly, I'm sure. But that certainly bodes well and talks about how we're swinging back the other way. I mean, when you mention the first quarter, that feels like a whole other time frame, like a whole other world. So it really wasn't that long ago, strangely enough.
Yeah, for sure. Yeah, so that's again, I think a positive indicator, and that's not really, that's just the sales. That's not even the pending pipeline that we experienced in May. So Cobb up almost 15% on a month-over-month basis. And you can see too, the other thing I just kind of wanted to point out, and it's kind of going into a little more detail with respect to the slight uptick in the homes that closed in the last 30 days that had to experience a price reduction during that listing period. And again, a big function of that is kind of what's going on with the current inventory on the market, and we'll get to that in a little bit. But definitely a positive indicator for the market in general for Atlanta. So again, key takeaways from that slide is across all counties other than Gwinnett, there was a market increase in the number of closings on a month-over-month basis, indicating that we most likely have kind of come through the trough and definitely on the upswing, or that check mark or the Nike swoosh that we talked about at our last month's meeting. And then while the percentage of homes requiring a price reduction is still below the first quarter averages, we did see a small uptick in that number, and I think that we will continue to see that trend as we move along. So let me just jump in here real quick and see. I want to make sure that we don't have any questions. I'm going to try and monitor these as we're going along, Jenni. So
sure. While you're looking
yes.
at that, I'll comment one more quick thing on the
Yes,
on
please.
the price reductions. Part of that could be is that when we're looking at a shorter time frame of 30 days versus a whole quarter, there's a lot longer period. But I also think, and I know that we're going to touch on it in a few, that there's some underlying components there as well. So
Yeah, for sure. Good point. Yeah, because again, the narrow time that you look, obviously you could get a better, more of a skew versus looking at a full 90 days. But, I think these are, again, trends that we will continue. And so when we looked at the second quarter versus the first quarter, which we'll do next month, I think we'll be able to kind of see some more definitive data points. So, and Alicia, yes, these slides will be sent out just like we have been doing, along with a recording of this webinar, so you can go back and watch it. These are total market numbers or just H&R, Barbara. These are total market numbers, so all 6 core counties. And thank you for raising that question. This is for detached inventory only, so it's not going to include any attached condo, townhome, looking solely at detached right now. So, all right, the next slide that we're going to take a look at is median sales price comparison. And initially, as you look at this, you might think, oh my gosh, properties are losing value because the median sale price has gone down in the month of May. Well, before you hit that panic button, just know that that was primarily a function of us basically liquidating the under 500,000 market. If you look and see at the number of sales that took place in May, a good portion of those were in that under 500 category, which is naturally going to swing your median sales price down a little bit. So again, before you start hitting the panic button or sharing with sellers that prices are depreciating, that really isn't the case. If you look at median sales prices just through the seasonality of the market, it is a little bit like a roller coaster. So again, the highlight though, Jenny, and why don't you touch on it, is just the year over year changes in median sale prices.
yeah, we love to see green, right? Like that's that's the key message here. But year over year, if you look at those, we're still increasing. And that's for median sales price. The reason that we look at median versus average is, you might have some big sales or some small sales that can skew it. So we really try to look at median to give our best number. And we expect, and the data supports, that we anticipate that sales prices will continue to increase, especially in Atlanta, but even throughout the nation.
Yep, and that's a great segue into the next slide here, talking about the key takeaway, and we'll look at something else. There were modest setbacks in May and for the 6 core counties, primarily as a result of what I talked on earlier, selling a lot of that under $500,000 price point. However, we are seeing modest year-over-year appreciation and expect that fluctuation in month-over-month median sale prices to continue. As the whole shelter in place has been lifted, many of you have probably been seeing this or even doing it yourself. Beaches are starting to open. People are starting to take some of those summer vacations. And I think we're going to see a little bit of that minor disruption that we typically always see. We didn't experience it the end of May and around Memorial Day going into June, as people were coming off of school, going through graduations and that kind of thing, that kind of hits the temporary pause button on some sales activity. But I think some of that just happening also has an impact on that, roller coaster that we somewhat see as far as median sales prices goes. But we are expecting, appreciation here in Atlanta to run anywhere from 4 to 7%, depending on your market area. And this next slide kind of, backs up that feeling that we have. You've got where home prices are projected to continue to appreciate from the following 6 different reporting entities. The only one who's a little negative on it is the Home Price Expectation Survey, but everybody else, the mortgage bankers, expect a little over 4. Zelman and Associates, a group that we subscribe to and provide information to, is thinking around 3. And again, this is on a national level, not just Atlanta. And then you see Fannie Mae, National Association of Realtors, Freddie Mac, and everything else. And then some who project out to, and next year and the following year. So
yeah,
again,
I think sorry, go ahead, Todd.
No, go ahead. No, go ahead.
I was just going to say that I think it's a very big positive that the Mortgage Bankers Association in particular and Freddie Mac are both as bullish as they are. And the reason I say that is because there was a big question about forbearance and how is that going to impact housing. I know this is specifically about home prices, but generally, if you're feeling bullish about the market as a whole, then it influences survey responses. So the fact that they are as highly positive as they are in this response as it relates to home prices, I think bodes well for the market in general.
Absolutely. Great points. Next slide, again, is kind of what's been happening with existing home prices around the country, and they break the country up into the different regions year over year right now. And this data was through April, I believe. So again, a little bit of a trailing index, but still kind of gives us an idea of what was happening, and we'll see what the impact is moving as we get into the months. But 7.4% across the country, 6.4% in the South. And you and I, Jenni, we were kind of commenting earlier about that Midwest number at 9.3%. But I know Texas has just been going gangbusters, specifically the Austin market. So I think that might have some influence on why the Midwest was performing so well, according to these statistics here.
Yeah, and I think obviously Atlanta being very, very strong in the South, but some of the other markets in the South, major cities like Miami falling off a bit, is indicative of to why the South number may not be stronger than it is. But still, 6.4, I think, is what the number was. Very, very positive.
Absolutely, absolutely. So then again, similar to what you saw last month and what we have been sharing is just a breakdown by county and also by price point, again, showing kind of first quarter results versus what's happened in the last 30 days. And I think the important thing to note here is a couple of things. Number one, it kind of gives you an idea of how much of what price point is being sold in the particular area. So in this case, in Cherokee, over 90% of the total sales are for homes less than 500,000. It's important to know if you're working with sellers that are in that 500 to a million or a million and above, it just really is a smaller segment of that overall market. So that's really kind of the purpose with the first column there of units closed. Price reductions obviously, gives you an idea of what's been going on the first quarter basis, and then what we saw in the last 30 days in terms of the number of homes requiring a price reduction in order to attract an offer and get to closing. But the real thing that I always preach on, and you guys probably think I sound like a broken record, is just the total days on market for those non-reduction homes versus those that test the market, are basically outside of fair market value, and the impact that has in terms of overall market time, which affects sellers, which honestly affects you guys in terms of your marketing costs that you have to incur. And typically what we see is that number has not changed for the under 500. It's still running at about 21 days on average as we will run through this, and 3 to 4 times market time. But one thing I wanted to point out on the next slide, which was originally just a breakdown of like a comparison of the month's supply this year versus last, and then also the total days on market this year versus last, is per request from somebody last month. I can't remember who it was, but I've gone ahead and added in there what the average price reduction has been for those homes that closed in the last 30 days. And you'll see that off to the side in a different column. So in this case, for the million plus, the home that sold, or the homes that sold, didn't have any price reductions. That's why that number is 0. That is not a misprint. So not going to go through every single one of these one by one, but just wanted to let you know that that's what these slides are. And again, as you'll see, basically the big things to highlight are just those total days on market in comparison to those things that had to have a price reduction. So any additional color to add, Jenni, as I'm flipping through here?
Yeah, either if you go backwards or to the next one, you'll notice that when we're talking about the breakdown, yeah, that's a good example right there, where you have under the units closed, the percentage of that overall market. So that's pretty different, the makeup of that versus the current inventory. And so that's something to note too, is, as Todd said earlier, the properties that are under 500 have been flying off the shelves. And so those ratios don't line up currently with the number of listings. And so you'll see that effective in the other stats and information. And I think that's just a snapshot of the current market, but not a long lasting trend. I think it's just where we are today.
Absolutely. Great points. And again, if you see some of these things, like in this case in DeKalb, I mean, a $380,000 reduction from million and above. There was a home that sold that I think had a $700,000 price reduction in it, grossly overpriced, which is kind of skewing that number. But at the end of the day, the numbers are the numbers. I think too, what's interesting to point out is in most cases across all markets, the month supply, even though it's gone up slightly across every county, it's still very much a seller's market in most cases, less than a 3 or less month supply. Even in DeKalb here, interestingly, the 5 to million, a 3.7 month supply, going from a 2.6 to a 3.7, still very much a seller's market. And even in the million plus, I would argue that that's a balanced market right now for DeKalb, just because of what the numbers say. Taking a look at Fulton, again, even showing some of the differences county to county. Going back to Jenni's point, only 61% of the market in Fulton is actually homes priced under 500. For those of you that work the Fulton County market, whether it be North Fulton or down into Buckhead and everything else, is how competitive it is in that 500 and below market right now, especially as you're working with buyers. 30% of the market is the 500 to a million, and about 8% the million and above. But then again, look at the days on market still, though very much below even what they were in the first quarter, generally speaking, a little flat on the million plus. But then the big difference in market time for those properties that are overpriced. And there again too, there was a big reduction in $1 million sale here, which is why that number for million plus is 878, 400. But you can kind of see there for the under 500 and the 5 million. Looking at Forsyth, if you're in Forsyth County and you got a listing and you don't have an offer within 17 days, that might be a little alarm bell for you, or a conversation you might want to be having with the seller. And we'll look a little bit about what the total average is for all property types, regardless of price reduction or not, in a little bit. And again, looking at the supply there, again, 2.1 months supply right now, under 5, a 6.7 month. That again, there was only I think 1 or 2 sales in Forsyth at million and above. Last month, the month supply was I think 16 months, and it jumped up to 43. Just goes to show you how quickly that can change based on the activity. And then the last thing is adding Gwinnett this month. You can kind of see what was been going on in Gwinnett in the first quarter and where we are kind of right now. Again, almost 4% of that market is under 500, and the correlating data points there with the traditional or with the non-reductions versus reductions on the sale prices. And then again, a 2.1 month supply in that market as well. So why don't you run us through these key takeaways, Jenni?
Sure, absolutely. As we've been saying, homes under 500K, it is quick. It's basically around 21 days. And for homes that are requiring a price reduction, it's 3 to 4 times longer. That's just real data that is helpful to share with our clients. From 500 and up, it's about 4 to 6 weeks. It actually feels like it's a lot longer to get your house prepared than it is that it will be on the market. So for those that are, sellers that are close to, well, I'm trying to get it on the market, we've been trying to finish, help them know that the faster they can get across that finish line, then more than likely, the more abbreviated they will be on the market. And then the trend is continuing from last month in the increased year-over-year month supply, along with a reduction in total days on market, all price points.
Yep. So let's jump into the current inventory situation. And I know a lot of you are living through this and feeling this. Pam Abernathy sent in a question prior to the webinar, and we can talk on it a little bit about just seeing more multiple offer situations, maybe running into some appraisal situations. I think that's a huge, I think it is something we're going to continue to see. I think part of that challenge is that sellers know that there's a lack of inventory. And so when you're having conversations, they're really trying to push the ceiling on what they're putting the homes on the market for. But I just want to kind of show you a couple things here, and Jenni, jump in anytime you want to add some commentary. But we all heard last month that there was an increase in new listings of about 13 to 14%. I believe it was a Real Estate Buzz slide that went out, and that was positive news. That meant that was a month over month, April to May comparison. So the fact that we got new inventory coming onto the market was significant. However, if you look at the current inventory situation and you look at the very first column, for example, Cherokee, current inventory of 941, that's actually 22% down from where it was the same time period a year ago. And just look down that column with Forsyth being leading the way with almost a 42% difference in what was available for sale last year versus what's available this year. And you can kind of see the inventory, what it was in the next column to the right. That's all something that we're going to continue to deal with. I think we're going to be dealing with it for quite a while, and just something that we're going to have to help our sellers and our buyers navigate. And then the other thing too is look at the number of price reductions, the percent overpriced of the current inventory on the market, and think back to a couple slides ago where we were still running in the upper 20s or low 30s. Look at how much inventory that's still on the market is currently overpriced. And then the other new two columns are the withdrawals in the last 30 versus 60 days and the holds. We're still seeing that same trend of fewer properties being withdrawn off the market even than they were 60 days ago. And again, I just think, unless there's a real good reason to pull it off the market, sellers just aren't doing that. So anything to add on that, Jenni?
Yeah, I would just say, I wonder, and I wish this is an opportunity where we could look through the computer and see you all, because I have a feeling you'd be doing this. But what I think is happening is that we still have people that are ready to make a change and ready to make a move, but they're a little bit nervous about where am I going to go. And I know that I step on the soapbox of InstaList so many times, but I think that's really going to be a benefit to helping those who don't feel like they can make a decision, maybe have confidence in making a decision to go forward.
Yeah. John Butler's got a great question he's put on here, Jenni. It says, with the COVID situation we have had, doesn't increasing sale prices help to prevent a lot of buyers from entering the market? I'll take a stab at it, but I'd love to hear your input too, Jenni. Does it? Yeah, I think it maybe potentially has an impact, but I would counter that with saying Atlanta still is a very affordable market compared to other markets. So while we're still seeing prices go up a little bit, I think there's probably other motivating or underlying factors that might have impacted buyers re-entering the market than necessarily sale prices. And I would couple that with interest rates. So even though prices are going up, with interest rates, I heard last week that a couple of our PHM folks were quoting rates below 3%, which is just blows my mind. Like you said earlier, Jenni, free money when we were chatting. I think if you couple that, you still probably have people who can afford more home than they could had, say, interest rates be up at 4 or 5%. But I'd love your feedback too, Jenni, on the question.
Yeah, nailed it is what my feedback is, because I don't really have anything else to add. That the interest rate equals buying power, and prices are rising. The capacity of buying power is stronger with the rates being what it is.
Yep. So great question though, John. And again, one of those things where it's really helpful to be able to have these kinds of conversations with your buyers and explain to them, look, let's not focus so much on the sale price of the house. Let's talk more about what your monthly payment is and what your commitment is, and how honestly you're able to buy more house with where interest rates are. And we're going to talk about interest rates in a little bit, but we don't really, you never know what might happen. They could go up tomorrow, they could spike tomorrow, and then that could mean literally thousands of dollars of what somebody could buy depending on where that swings. So, but great question. The next slide we're going to look at here, again, I apologize, it's probably a little small for all of you to see right now, but it was just basically the summary, and the reason I wanted to show it is highlight where we are, and this is all 6 core counties, and really kind of a comparison, if you can see my mouse circling here, of where we are in the first 15 days in June versus where we were the same time period a year ago, and the inventory shortage. 30% down across the board, all price points. And then also too, you can kind of see the positive, I think, here though, is look at the pended. The pended is kind of like what's happening, what's going on. The sold's the past history. We can't do anything about the past, but I'm very pleased to see that we're pending just about like we were in May, especially in light of the fact that May was such a strong month for us. We're basically pretty much flat and even, and a lot of this depends on where weekends fall and everything else in terms of this data getting reported. So again, though, just kind of showing you where that inventory is, and again, something that we're going to continue to do. Versus the same time period up above from May to May, which again is kind of a looking in the rear view mirror. That's kind of where we were. I think this number though is the number that we need to kind of focus on at that 30.3%. So, and then just showing also that, as far as the month supply right now across all of greater Atlanta, and you'll hear this in like numbers that are shared, is it's a 3-month supply. We were at 2.4, but still 3 months, still very much a seller's market. Again, that's across all price points, obviously going to change as we get up into the 500 to a million, and certainly a million and above. So takeaways, run us through the takeaways, Jenni.
Yeah, the good news is increase in listings, and I think that's been consistent every month of this year since February. So that's a positive thing. But as you pointed out earlier, there is still an undersupply overall, and that crosses all the counties. And the shortage of inventory, as we talked about, is under 500 for a variety of reasons. And new listings between 500K and a million and million plus are essentially consistent. And I think that's important because, some of the luxury clients are concerned to a higher degree than they have been in a while because of the seller's market. And what we are sharing with them, and what you should be sharing with them, is we're going to see some positive things, and I think May was a good indicator of that as well. And then year over year, available inventory is down, as we talked about, 24% in the 500 to a million, and then 14% in the million plus.
Yep, good stuff. All right, moving on. Let's see. Then kind of carrying on this, and I know that you already mentioned InstaList, Jenni, and I made it a point to really kind of bold it there. But I think just thinking about the current inventory situation, obviously we've already had the question, but the lack of inventory is going to continue to create multiple offer situations for all of us. And I think you guys have a real uh, feather in your quiver, so to speak, with regards to your access to Prosperity Home Mortgage and that full loan approval guarantee, that if you'll get your buyers pre-qualified or pre-approved with that, it in essence is like making a cash offer with that, guarantee and everything else. But anything to add for that, Jenni?
No, you would think as much as I plug InstaList that I'm invested with them. I am not. But I know that it is a great solution for our clients, and therefore a wonderful opportunity and advantage for all of us.
Yeah, so for those of you that are getting listings, regardless of price point, please be putting those in there, because not only are you going to be helping your seller possibly, with limited marketing time, but probably going to be helping out a fellow Harry Norman agent, who was working with buyers and maybe lost out on a deal or two here or there, and maybe they've learned the lesson at that point that now's not the time to come in and lowball somebody. It's just not the environment for that. But please use that as a resource, so it's a win-win for everybody. Breaking it down by county, we're taking a look at the inventory analysis by price point again. I've also included the average price reductions of those that are currently on the market. So you can kind of compare and contrast to like where the closings were and where the current inventory is. And in some cases, you're probably going to see that they hadn't quite got there yet in terms of probably need to do a few more little price reductions here and there. But again, a new field for you guys to use this month as you're having conversations more specifically with sellers in terms of the impact of overpricing the homes and the discounts that they might have to consider to attract an offer. But just kind of going through each county, you'll see that there are maybe some consistencies in the under 500. We were running 15 in Cherokee and Cobb, a little up in DeKalb, which kind of makes sense, getting a little closer to the city, higher prices, more of a discount, so forth and so on. And then, where we are as far as the average price reductions in Fulton County and so forth and so on. So again, you can kind of see the overall current inventory. The number here to under the current inventory, that number is a percentage of that inventory to the overall market, going back to Jenni's point earlier about how you're going to see that number probably reducing in that under 500 just because there is no inventory there right now. So we really need to, be trying to find ways to fill that up again, so to speak. So again, if you want to take this slide compared to the sales data, you might be able to, pick up some interesting trends to share with your clients, and also showing Gwinnett as well. Key takeaways here, generally speaking, across all price points in all counties, the percentage of price reductions for current inventory is greater than the percentage of price reductions for homes that closed in May, suggesting a couple of issues. Despite the inventory shortage, over a third of our current sellers just aren't still in alignment with current market value. As the months go on, the percentage of homes requiring a price reduction is most likely to rise because we already have more homes that are overpriced than what has closed recently. As new inventory comes onto the market, this is going to put additional pressure on overpriced properties. Again, more competition you have coming on, more choice is going to put pressure on those people to get better in alignment. I think we're going to see average price reductions most likely rise because sellers are just overly aggressive coming onto the market right now. And I would suggest that now is not the time for sellers to test the market if they want to sell. Now, if they want to stay in the market for a long, long time and then reduce, if that's the way they want to roll, good for them. But I don't think you as a listing agent wants to be investing marketing dollars and that kind of thing. So important to have those conversations. Anything else to add, Jenni?
Yeah, before you go to the next slide, I think one of the, this would also be great to hear a little bit of dialogue from the group about, but I think part of it is condition, because what some sellers are hearing is, wow, things are moving fast. I can get top dollar for my property. And where the differential may be is that, as we all know, the time period that people have lived in their homes has extended from what used to be 7 years, well, 5 years, then 7 years, now is more closer to 10, sometimes longer than that. And for a vast majority of sellers, if they're ready to make a change, they haven't perhaps updated to the extent that they need to be in the non-price reduction category. So for those who have sellers that fit that, that's certainly a great discussion point that you may have in helping them prepare their home.
Awesome point. Very, very, spot on. So Paula, we are going to answer that question. The question was, do you see high net individuals moving money from the equity markets to the real estate market? We're going to talk on that just a little bit momentarily, so hold that thought. And Rachel said 100% about condition. Turnkey is selling with no issue and top dollar because of shortage. If the home needs anything, the buyers are ripping it apart. Couldn't agree with you more, Rachel. And again, I always go back to that whole people have been home watching a lot of HGTV and they want it to look just like they see it on the television. So that's another challenge that we're going to continue to have as we move forward. But nothing that can't be overcome with some good education on your part with our clients and customers. So let's take a look and see what's been happening with the pending inventory. So what's been going under contract over the last 30 days and what we might expect kind of moving forward. I wanted to kind of just open with this slide because this is a slide that we shared last month. And again, I wish we could see your reactions because I'm sure there were gasps and ahs and like, oh my God, that's exactly what I'm feeling. But this is where we were 30 days ago with regard to kind of the pending inventory, what had gone under contract, and the whole market and the various price points. I want you to take a look and see what a difference 30 days can make. This is where we are now. It's to say that the gap has been narrowed would be an understatement. It's absolutely huge. Now, granted, those are still red numbers, but we are almost to where we were the same time period last year, which I think is just amazing, And so I would almost argue that for Atlanta, we kind of talked about it last month. We had the decline, we were in the trough. Were we going to kind of come out like this, or was it going to go like this? I would almost argue that, at least for what we're seeing right now since May, it's more of a V-shaped recovery. And we're going to talk about maybe why that's happening in a moment. But I think this is positive news. And I hope you guys are all doing the happy dance wherever you are. Can't see you, unfortunately, but I think this is fantastic. So anything that you'd like to add to that, Jenni?
No, I was doing the happy dance.
You were? Okay, I couldn't see you because I can't multitask and do things at the same time. But walk us through this pending inventory comparison.
Sure. So obviously what you're going to see here is a pretty big adjustment. If you go all the way to the right, the first quarter percentage price reductions, you'll see the lowest is 32.9, and that ranges all the way up to 41. If you compare that with the column immediately adjacent, the last 30 days, you'll see some significant difference. And that ranges in that column from 27.4 up to 31.7. So I think that partially is an adjustment because of the shorter time period, but I think from a greater standpoint, it's also indicative of, things are moving, and that's good.
Yep. And kind of summarizing that in exactly what you just said and the key takeaways, May was a huge pending month, almost returning to 2019 levels. The total days on market across all price points are still significantly lower than the pre-COVID first quarter. Pending inventory requiring a price reduction ticked up a little bit compared to where we were the previous month. However, still below the percentage of current inventory reductions, which suggests two things. I'll cover the first and then love for you to comment on the second, Jenni. The first is, I don't think buyers are interested in making offers on overpriced properties despite the lack of inventory. They're seeing it, you're probably getting good advice and education from you guys as you're working with your buyers. But talk to me a little bit about that second bullet point, Jenni.
Sure. Any homes with price reductions can be perceived as red flags or desperate. And I think that's pretty weird considering the total days on market. But if you think about it, if the messaging that people are hearing is things are flying off the shelf, there's low inventory, it's sort of a, if you will, a sign of weakness, or perhaps a sign of reality is probably the better way to phrase it, that if you have to have a price reduction, it means we're getting realistic and now we're ready. But the perception could be worse than the reality, whereas getting it priced right at the beginning is much more advantageous.
Yeah, or I bet some of our agents would say they're just darn right stubborn and they won't listen to me, So that could very well be the case too, is they hired me for a reason and they won't listen to me. What am I supposed to do? So anyway, yeah, I think though it is, and we all know what a house that's been on the market for a while, had some price reductions. What's the first thing that we think as agents? Got to be something wrong with it, right? It's either a condition issue, going to back what Rachel said, or does it back up to a road or power lines, or there's got to be something there that this thing hasn't moved. And so you're kind of a little bit hesitant to go show your buyers. And I think that's, very much the case with what's been going on lately. So
yeah, is there such a thing as a COVID discount? Because I think if there is, buyers are wanting it, especially if there's been a price reduction.
absolutely, for sure. I love that COVID discount. You'll have to coin that one. All right, we're gonna just jump into some other trends and info right now. In the first couple of slides, I think are just really things that you can use if you want for social media, or put in your buyer or your seller packets, and that way it's not necessarily something you're saying. It's coming from sources outside of Harry Norman that are being communicated on a more of a national level. This again going back to Zellman and Associates, somebody who we subscribe with and provide information to, but her comment was housing will fare better than expected during this severe downturn, and we're already seeing that is definitely the case. Another one from CNBC: new home sales rose slightly in April, defying expectations of a huge 22% drop. So again, everybody was trying to look in their crystal ball and think what was going to happen. And as we see the data points start to kind of come out, housing is definitely leading the way in terms of kind of pulling us out of this into this recovery situation.
Hey, before you
Next,
leave that one,
yeah,
real quick, because that was related to new homes, just a comment that I think last month we talked about that builders were anticipating having less inventory, or building or completing less inventory than their original projection. And I think that was based on just financial uncertainty at that time. Now, I think it's going to be based on a delay in getting materials to the various locations. So from a resale standpoint, that certainly benefits us to a significant degree, because there will be even less inventory from a new homes standpoint, which should help our sellers.
absolutely. And I'd love to, I haven't heard this yet, but along those same lines, Jenni, I'd be curious if anybody who's listening right now has been experiencing this. If you have current things under contract in new home communities where you've been maybe experiencing some of those delays, or that builder has pushed back the closing, either because of lack of labor or inability to get the building materials and things of that nature. But that is something maybe for us to think about as things are progressing and moving along. Let me see if somebody jumped in. Bob Freeman, we're for those that don't know, we're representing an over 55 community up in the I guess that's Jasper, isn't it? The Grandview builders. It's the Grandview. Extremely bullish and plowing ahead with development. That's great to hear. So good deal. Good for us. Going back to some of these quotes, this is something that I know that we can certainly relate to at Harry Norman and with Prosperity coming off a fantastic month. Again, thank you all for your support of Prosperity. But mortgage demand for home buyers shows unexpectedly strong and quick recovery, and the quick recovery has surprised most forecasters. And again, so that's just a testament to like the buyer activity out in the marketplace, and people still needing housing, right? We talked about this last month, Jenni, where you have the housing, you have food needs, shelter needs, and those. So it's a primary need, and so I think that's evidence of that with that quote. And then the last one is, and because a lot of the data points that we typically go over are more trailing indicators, that's why this month I really wanted to focus on what the pending inventory is, because that's representative of actual buyer urgency and buyer behavior. And then the pending listings, the new listings, is actually sellers who are getting ready to come on. That's why we really kind of focused on that this month, to kind of project what we can expect in the next 30 to 60 days. But this is something that came out from First American. We know that April was really the trough, I think, for the housing market. We do expect the rebound to be quite strong in the main numbers that will come out at the end of the June. Well, we already know what the main numbers are for us, for Harry Norman, and for Atlanta, and that has been right along the same lines as this quote, and I expect that we'll continue to see that. But Jenni, you want to talk a little bit about employment, because I know we focused on it last month and the numbers were pretty grim, but this is, I think, blown away everybody's expectations and what happened in the last 30 days.
Well, it certainly impacted the stock market, which you all may remember. I think it was a week or so ago, maybe a little bit more. Time seems to warp these days, but obviously it was better than expected. And so that was a very positive thing. And what you may not be able to see here is just the different categories. Obviously, construction certainly being one that's performing well. Food service and bars is a little bit surprising to me, I guess, in a way, because now they're starting to reopen. So I understand that to some degree. And then the governmental sector definitely being the strongest in a negative category. And I think that will continue as, taxes, one of the contributors for Atlanta specifically is taxes from hotel revenues. And obviously with those not being very vibrant in the last couple of days, that's going to impact our overall amount that the governments have to work with. So that's probably why we're seeing that one start to take a hit in that level, but very positive in most every other sector. And that we expect and hope that that will continue to be the case.
Yeah, and something that I didn't include, but I heard on Keeping Current Matters, and they talked about what they were calling a misclassification, as the Department of Labor has been coming out with their report that just came out. I believe it was this last Friday, maybe. They were talking about a misclassification, which is really more or less people saying they were unemployed, but probably really weren't unemployed, not understanding the question when the poll went out, and it was more or less, um, I'm taking a temporary leave of absence to take care of a family member, or I'm going to be taking some time off to go, on a vacation or that kind of thing. And it honestly, it accounted for anywhere from a 2 to 3% margin of error. So what we thought we were pressing up to 20% unemployment in last month's number, in reality, probably we're only about 16 or 17% because of people not really understanding that they weren't really truly unemployed. It was just by their choice that they decided that they weren't going to be working. So again, we'll probably see those numbers adjusted over the next couple of months as they kind of figure out their way through that. But nonetheless, these were very, very positive numbers. And I know they're feeling that here in Atlanta. And, we were on a call yesterday, Jenni, with the leadership team, and we had Karen McCrae on there talking about the relocation business. And she mentioned that Norfolk is starting to move people around again. And you want to just touch on some of what she shared with us yesterday and what she's seeing in terms of movement again.
Yeah, and this is a trend that started, before COVID, but there's a lot of companies that are looking to exit some of the more expensive headquarter areas, that being the Northeast, that being California, and looking for, as John Butler kind of talked about, even though the prices are going up, what we're seeing is that Atlanta is still relative compared to other major cities, more reasonable in cost. So we're happy that that's continuing. Our availability and proximity to great higher education contributes to that as well. So we're happy that a lot of the relocation business is starting to turn the faucet back on, if you will. And Atlanta is still desirable and of interest to many, many companies.
Yeah, and I think too, just speaking of jobs, and I wasn't aware of this until Luke shared it with me. But there are a lot of large companies, Coca-Cola being one, where they have told their people, you're telecommuting, you are working from home for the rest of 2020. And on the onset, you might think, well, that's not great news, but I think possibly it is, because if people are going to be working from home, they're going to need that home office now. And again, I talked about it last month where you have two spouses working from home. Now you need two home offices. It necessitates the need for a possible housing change. And so again, you're always looking for, going back to ninja stuff, you're looking for changes in lifestyles that necessitate the need for a change in housing. So I think that we're going to continue to see the impact of some of those decisions that, and I know Coca-Cola is not alone. Other companies are keeping their people working from home, and we'll be interesting to see the impact that has on housing as we move forward.
Yeah, that's a whole other discussion for another day, because how that will affect what people build, what people's preferences are. I think we're starting to see certain preferences as that develops into trends. Certainly, we will communicate that. And I'm sure you all will share that with us too, your experience, what buyers are looking for. So collectively, we will have some great information from what's happening on the streets and what is happening overall.
Yep. Let's see. Let's see. Next. This is just another little sound bite. Oh, sorry about that. The May gain in the employment situation was the biggest 1-month job surge in U.S. history since 1939. Again, I think it kind of surprised everybody, and that's something coming from CNBC. But the more important thing, and we showed a similar slide last month, was just focusing on the fact, yes, currently 13.3% of America is unemployed. You know, we don't like to see anybody unemployed. However, that means that 87.7% of America is still working. And to the right of that is, of that 13.3% that are unemployed, 83% believe that that is just a temporary situation due to a furlough or something like that, and they expect to fully get back to work. And that was something that came out on June 5th. So again, a positive in terms of where we are going with employment, because as we touched on last month, it does have an impact on people's ability to buy homes. So and then kind of speaking to that, this was something from the Federal Reserve Bank in their May report. 75 plus of the job losses are temporary layoffs and furloughs, according to employers. And then you're also seeing, you know, certain industries where they need help, they need people, and you've got some of them listed below. And so I think, again, it's a positive sign. So anything else to add to that, Jenni?
Nope, covered it well.
Okay.
I'll take this one. Employers added 2.5 million jobs, as we talked about earlier. This was kind of fun, blowing Wall Street expectations out of the water. That's pretty cool. When the forecast was 8.3 loss, and instead was a 2.5 gain, a 10 million swing is pretty significant for sure.
For sure. Yeah. And I think we'll continue to see that, you know, as other markets across the country, you know, we were kind of first to the fray, so to speak, in terms of reopening and people returning back to restaurants and getting some of those people reemployed. Other parts of the country are just beginning those phases, and I think we'll see those numbers continue to increase as we go throughout the rest of the summer. Paula, this is kind of speaking to your question that you had earlier, and this is something, a Gallup poll that was recently conducted. It says real estate at 35% remains the most favored investment to Americans, as has been the case since 2013 when the housing market was on the rebound. More than a third of Americans have named real estate as the top investment since 2016. And Jenni, I'll let you cover this next slide, which kind of goes over where the other investment choices are. But real estate is
Sure.
certainly leading the way.
Sure. Before I cover that, I'll add to that too, is something that I think is important, especially in Atlanta, and certainly of late with developments that are happening socially, but minority home ownership could certainly be stronger. And what we've seen over time is that those who invest in home ownership have more financial security, as evidenced by this slide, than other opportunities. So real estate being at 35%, stocks 21, savings account 17, and gold, surprisingly, at 16. And those being the best long-term investment. All of us being in the industry, we know that, and it's like preaching to the choir, but it's certainly something that is nice to have evidence and data that continues to support those decisions.
Yep. And again, just kind of that showing where what the trend has been with those different investment opportunities since 2011. You can kind of see that gold was the reign supreme back in 2011, and kind of where it's gone and where real estate was, and kind of coming out of the recession, and just a steady uptick in, you know, 35% of the people now, that's where they're investing. And then also the stock market, kind of where it was. It kind of, was trailing along or trending along with real estate, took a dip in 16, and now a little bit of a dip there as a result of all of this craziness that's been going on right now. So just again, when somebody asks, where should I invest my, monies, can't go wrong with real estate. I love this slide, and it kind of again talks to just the impact the housing market has on the overall economy. And what you're looking at is what is the average impact of one home sale in the United States. And this is a new construction, a new home sale, but also you can back out that last little circle or whatever and figure out what a resale impact is. But for a new home sale, on average in America, it is responsible for a $88,416 economic impact. If you back out that $45,000 for the new construction, it still is around a $43,000 impact for every resale home. So talk about something that's really going to drive the economy and get us out of this. It's housing and it's selling homes. So I just think this is just a real cool slide that kind of shows the impact that what we do as a occupation, how it helps the country.
And to add to that even more, it's of those 4 other options to invest money, it's the only one that you really get to enjoy while you're investing in it. And so it's like double the pleasure.
Absolutely. And then this is just kind of showing what the average impact is on a per state basis in Georgia. Again, this would be new construction 76. So even if you subtracted the 12, the delta difference between 88 and 76 off of the resale, you're still looking at a 30,000 plus economic impact for a resale home, and obviously 76,000 if you sell new construction. So again, I thought a pretty neat slide just for awareness and to share as appropriate. And then to round it out, we're just talking about mortgage rates and kind of where we think they're going to go. We already alluded to it earlier, hearing some things even in the twos, but this is what all of the crystal ball lookers think is going to happen. You got Freddie Mac, Fannie Mae, mortgage bankers, and NAR, and then the averages to the side. But the second quarter, you see third quarter, and then going into 2021. It's crazy what the interest rates are at right now. And going back to John's question earlier about affordability and a buyer, does rising prices impact a buyer's ability to get in the market? I think at these interest rates, it still allows for somebody to get into a home pretty easily. Obviously you've all probably heard from your prosperity folks talking about some of the challenges with some of the just underwriting and that kind of thing as effect of COVID and the credit scores and everything else. I think as we go through the months, we'll see a continued loosening of that and people being able to qualify maybe that can't currently right now. I know the prosperity team will do everything they can to get anybody they can a mortgage, but anything else you'd like to add to this, Jenni?
No, I think obviously that those are ridiculously attractive. Another thing that is a positive is appraisals. I haven't heard much about them not coming in, and I think that's a big positive. And the reason why is for all of us who try to look at pricing and figure out how should we price a home, certainly COVID threw us a big curveball because we had a screaming first quarter. And then we had a very abrupt halt. And then where do we go? What's this COVID discount? Is there one? And so the fact that appraisals are turning out to be very positive and close to the sales price, I think has aided in the recovery. And so I'm happy to see that and expectant that that will continue.
Absolutely. So that is all we have for you today. Just trying to be respectful of your time and feel like we've really kind of covered the important things that have been going on as it relates to Atlanta. Would love to open it up to any other questions that you might have over the next couple of minutes. Doesn't necessarily have to be related to statistics in Atlanta, but we're both here and happy to answer any questions that you guys might have. I know that I have a question for all of you, and you can feel free to put it in the chat there. Is this something that you would like us to continue doing? We've got we got about 110 folks on the call. Are you finding this helpful? Do you think you want us to continue to do this on a monthly basis for the foreseeable future? Just trying to, okay, I'm seeing yes, 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 please, absolutely. Okay, I'll take that as a yes. And we're happy to do it. It gives us a chance to kind of, Jenni and I love interacting with all of you. You guys are the heartbeat, and we love having a sense of what's going on in the marketplace. So any questions that you have, or any ideas or suggestions of information that we could try and provide you, shoot us an email. Don't do it in the chat here necessarily, because I don't know how to save that and go back and look at it. So if you put something in there, I may not see it. I'm kind of monitoring it right now. But if you have suggestions or ideas of other information that you think would be helpful as you're out and about having conversations with buyers and sellers, we will do our very, very best to provide that to you. But any questions of anything that we have gone over? Let me scroll back up here and see if we've got anything. And I appreciate y'all's wanting to hear more of this. It's really nice to know that we're helping you out here.
While you're looking at that, I'll just make one other comment. And I think this is something that Todd alluded to earlier about, people maybe taking a break, going to the beach, just taking a pause for a minute, having a change of scenery, whatever the case may be. I think we would both encourage you to do that personally, just from the standpoint of, I expect, and I think we both expect, that the balance of the year that we will be busy, and that will translate well to our business. So there is merit in taking a moment, resetting your brain, getting that positivity going, and sort of gearing up for the next chapter. So we encourage it, and we so value the efforts that you all do every day. It's important.
Absolutely. Couldn't have said it better, Jenni. Bob Freeman had something on here, kind of going back to what we were just talking about in terms of mortgage rates and somebody's ability to, purchase. Said he ran numbers. He was working with a buyer considering a $450,000 home at a 3.25% interest rate. Today, they can get a 2.75, and they could afford up to 495 and keep the monthly payments the same. I mean, that's significant, y'all. That's a 10% increase, and certainly we're not encouraging you to go and sell somebody. We don't want to make them house poor. That's not the point of what we're talking about. It's really the point about the monthly payment is really something to kind of focus on versus what's the list price or what's the sale price, whatever they're able to negotiate, and how much they can afford. We want people to afford whatever it is that they can afford, but with lower interest rates, they can afford a larger sale price because of the interest rate. So let's see. I don't see any other questions, but we do appreciate everybody's participation, and thank you for being here. For those of you, for you fathers out there, happy Father's Day this Sunday, and that's all I have, Jenni. I'm tapped out.
Sure. I would love to wish
the mic,
everybody,
right?
I would love to wish everybody a happy Father's Day too. And also this weekend is Freedom Day, Juneteenth. And so we recognize the importance of that. And we appreciate all that every single one of you contribute every day. And Todd, thanks again for leading the charge on this. Great job.
Take care, everybody.
Bye-bye.
We appreciate you.